Hello, this is Pat Walker at MissionWinners.com, and I am making a video for Jill. Jill, I'm thankful you're part of the team, and you ask a very good question. In fact, you have a couple of good questions here, and I thank you for the kind words. Newer subscriber, so again, I welcome you to the team. That's great. How much of your total investable dollars to put into more long-term positions? Well, first off, let's discuss strategy. For longer term positions, I will stick with quality stocks, a lot of max list stocks, and also you can use ETFs. But the one big difference I think I would make is this. You can refer to daily charts, but I would definitely encourage you, and I learned this from Bill O'Neill, refer to weekly charts and only buy stocks or ETFs coming out of longer term weekly basis. And if you are good with entry, you will be able to own those for a longer period of time. And I'm going to show you a couple of examples here, okay? This is QLD. This is going all the way back to 2015. I'll even make it smaller here, okay? We'll take it back to here. 2014. But you can see when you get the longer bases, that's a good launching pad. This shorter stuff, shorter whippy stuff like this is not conducive. QQQ, longer base liftoff and a good steady grind. Looking for that longer base. Spiders was real loose in here, but then you had this kind of a cup with a high handle, longer shelf here that you can own and let it work on the weekly chart. And when you're doing the weekly, I would use, this is the 8-period exponential. You can use, this is what Bill O'Neill uses, the 10-week simple moving average on weekly charts. I'll say that again. Here's SSO, the 10-week simple moving average. Now, I'm going to show you some stocks. Look at this longer weekly base right here on Apple. And it just, got a little bit whippy in here. But if you've got a good cost basis, you can let it work. Amazon had a cup formation right here, had a handle, cup and a handle right here, has had a couple of longer positions in here that you can use. The moral of the story is this. I'll keep on going. There's Alibaba. Look at that long cup and a handle. Baidu's, had a period right here, but then it got loose. I would also say this. I would stick with bigger name stocks. I would stick, if you had to really fish in two holes, it would be this, actually three. The major ETFs on the big indexes, like QLD or SSO, I would stick to that. DDM, I would stick with the max list, and I would stick with the Dow stocks, looking for longer weekly entries. There's Goldman Sachs. Longer, look at MasterCard. This is a nice entry. Look at that longer base right here. And it just kind of marched. MasterCard, Netflix. Longer entry right here. There's a spot down here too. And just kind of ground up. The moral of the story is this. Defer to weekly charts. Find leadership. Here's Visa. That's a Dow stock also. Find leadership. Here's NVIDIA. Look at this. Isn't that nice? Find leadership and key on those. Don't look at hourly charts with them, but go to weekly and then take it down to the daily for an entry and look for longer weekly bases of good companies. I would look at the max list. I would look at the Dow stocks. You can find great entries there. Now, let's talk about how much. Bill O'Neill talks about owning 8 to 10 positions. I would say the same thing. You could literally have two accounts. You could have your long-term account with 8 to 10 positions, and you could have your more aggressive investing account, swing trading account, and I would still stick with a maximum of 8 to 10 positions. I periodically will get up to 12, but by and large, 8 to 10 is all I can handle. It gets to be too much. So that will help, which leads to your last point. What do you do? Find, if a trade gets away from you, what's the best way to try and recover? Well, here's the moral for us. If we don't have too many positions, a trade should never get away from us. Never. And I really encourage, be careful with that, because it only takes a couple of big waterfalls to destroy your account. So what would be the solutions? Again, not too many positions, quality companies coming out of longer weekly bases, precise entries. And we coach it every day at Mission Winners, what kind of chart patterns to look for, and you know them. Volume surges through the pivot. And then always, if you have you probably have a career, I encourage you, ma'am, and I mean this out of respect, please always have a sell stop in when you first buy, and as it goes up a little bit in price, raise your sell stop. And don't let a 20-30% profit come all the way back down to your purchase price. Don't do that. You can say, well, it might come back. We don't want to do that, because that's how they can run away from you. So a good till cancel sell stop will really help you. Not a daily sell stop, good till cancel. It's called a GTC sell stop. As the stock grinds up through time, you can raise your stop a little bit. Don't raise it too much, because you don't want to get shaken out, but just raise it and let it work for you. Let it work for you. And that would make it easier for you. Let me see if you got anything else. Just want to do this justice. Hold on. Yeah, finally get a trade. Try to recover. If a trade gets away from you, how do you recover? I don't mean this in a flippant manner. It's compulsory. Don't ever let a trade get away from you again. It's so important to... I argued once with a stock, and it turned out to be about a $200,000 hit, which was really stupid years ago, decades ago. We don't want to do that. So a good entry on a daily and a weekly chart, and put a sell stop in. That way you can never, ever suffer a major loss. It also lets you sleep at night. As the stock pushes away from you, raise the stop up a little bit. Not too close, and then just let it work. That's the best solution I can give you. Now, let's take this a step further. If a trade gets away from you, what's the best way to recover? Jill, here's what we can do. And I'm not trying to be nosy. If you have one of those, and again, out of respect, please, this video is going to you. This doesn't go to anybody else, okay? But if you'd like to say, if you want to share it with me, discreet, we'll be discreet here. Say, hey, Pat, it's whatever. I'll look at the chart for you, and let's do a good hard analysis on it. Let's look at the earnings numbers, the sales numbers. Let's look at the estimates. Let's look at the daily chart. Let's look at the weekly chart. Let's look at the monthly chart and see what we can find out. Let's look at the other leading stocks in the group. Let's look at the industry group chart. And I'll make a video for you on all this so that we can see what's the best course of action with that. But from now on, you'll know what to do when you buy something. Put a sell stop in, good till cancel. As the stock pushes up, raise the stop up just a little bit, not too much. And you can say, well, gosh, I just want to let it work. Well, here's Square that's grinding up. But could Square do this and then come all the way back down below your purchase price? Any of them can. Any of them can. Alibaba gave back a lot here. Baidu. Look at Baidu. I mean, the stock went up, falls way down, goes back up, has a good lift right here. Okay? Good lift right here. And has a good run. And then all of a sudden it's back down here. So we've got to always be careful with all that. So like I said, Jill, if you'd like to do that, we can sure do that. and look at those. To recap, when you buy something and it's a longer term position, I will tell you this, every stock I buy, I look at it that it might potentially be a long-term position. I like to own them and put them away and forget about them. But in this market, with the elimination of the uptick rule, doesn't happen as much. So focus list, the Dow stocks, max list stocks, long weekly basis, volume surges through clean and simple pivot points, put a sell stop in so that you never have a major loss. As it goes up a bit, raise your sell stop up to break even or a hair above and let it work. Continues on, raise the stop up a little bit more, not too close, and just let it work. Do not put your stop so close that on a little drop you get shaken out. You start doing that, and all of a sudden you start seeing the longer term portfolio work. So Jill, I hope that helps you. I'm sorry this video is a little bit longer, but these are very important questions and I don't take them lightly. So thank you very much. I hope it helps. And like I said, if you want to look at one that maybe did get away, I'll be glad to do that too. So thank you so much for the kind words of encouragement. Have a good day and a safe day. And I thank you.